Today's Talk About It Tuesday question is, what is the smartest way to buy a car? Cash, finance, or lease? Well, I don't know if there's a smarter way to buy a car because I think it really depends on your situation and what you're trying to get out of it. So let's just compare, and depending on your situation, let's see which one fits best for you. So first, I think we should compare the two ways to purchase, right? So there's either financing or there's cash. So if we look at the financing process, you'll need a down payment. You'll have to qualify for a car loan, and either you'll get it from a bank, credit union, or usually sometimes the dealer offers financing. You'll make a deal to pay it off in between 5 and 8 years, depending on what you want your monthly payments to be or how much you can afford. And then at the end of the payments, the car is yours. So that's the financing route. So the interest rate that you get will be dependent upon two things. One will be dependent upon what the market is offering. So the higher interest rates are in general, the higher your interest rate is going to be. And depend on what your credit score is, that will dictate where you fall within the range. If you have a higher credit score, obviously your interest rate will be lower. So that's the process, simple process. And then there's buying it outright in cash. So buying it outright in cash means the total amount of the purchase price you'll have to save in advance of going to the car dealership. So let's talk about advantages and disadvantages of that first. So if you want to pay in cash, that means, and cars now $40,000, $50,000 easily, brand new cars. That means that you'll have to save $40,000 or $50,000 before you walk into the dealership and buy the car. And if you're in a position where you're not desperate, meaning that you already have a car that's operating, then maybe you start saving as soon as you buy your old car. It's no big deal. You've been saving for a long time. But if your car conks out on you and you don't have a car and you're forced to get a new car now because it's too expensive to repair or it doesn't make sense to repair, now where's that money coming from? So are you going to dig into savings from something else, or are you going to take it from your emergency fund? Like, where's that coming from if you weren't saving specifically for a brand new car at that time? So there becomes a disadvantage in the sense of you have to save ahead of time to get it all at once. There's also the advantage of financing because you can afford more cars. So not only do you have to save less because your down payment can be lower, so you walk into there with just a fraction of what the purchase price is, but because of that, you can actually buy a better or more expensive car because you're stretching the payments out over a longer period of time. So instead of walking in there with $50,000, you walk in there with $5,000 and you're making monthly payments that are affordable to you. And you can actually get a better or more expensive car if that's what your choice is, if that's what you want to do. I think there's a big disadvantage also in the fact that your car depreciates in the first 2 years, right? So your car depreciates in value significantly the first 2 years. So you're paying full price up front for something that's worth a fraction of that in 2 years. So in my estimation, getting a new car in itself is not necessarily the best idea. I think you should probably get a car that's 2 years old because you still have a lot of the warranty. Most of the depreciation is gone. So if you're going to pay cash for it, I think you should wait 2 years, get a 2-year-old car because it still smells new, it still runs new, it's still under warranty, and you can extend the warranty a little bit if you needed to. But the depreciation is gone. An advantage of paying cash is if you go into the dealership and you pretend like, right? And I'm not saying you're telling them you're going to finance, but you don't let on that you're going to pay cash. You can negotiate a better deal because car dealerships think they're going to get their money back in the terms of financing. So you negotiate a really good deal and then bang, hit them with cash. You'll get a better purchase price in the long run. You'll also get a better purchase price, obviously, because you're paying principal and interest if you finance. If you pay cash and one of your goals is to increase your credit score, it's not going to impact your credit at all. But if you purchase a car, it could help your credit because now you have a different mix of credit type and you're paying as per agreed, so it can actually improve your credit score. So of the two, again, depends on what you want. If you want more car and you want to put down less money and pay it over time, but you're going to end up paying a little more, then financing is a little better. If you want to get just a better deal overall and save money, then purchasing it is in cash would be better. You can negotiate a better deal and you save on the interest payments. So let's compare that to leasing. So leasing a vehicle, you don't have to walk in there with a down payment. You have to usually pay a month's worth of the lease fee. So you pay 1 month worth of payments. And so now for maybe $400 or $500, you're walking away with a car. You're driving away immediately with a car. And your lease payments tend to be less than financing unless you put a huge down payment down. So again, you can afford more car, a better car, more expensive car for a lower payment. Usually a lease agreement is two to 3 years. If you want to get a new car constantly, if you constantly want to get a new car, because again, if you purchase, you got a car note 5 to 8 years, and then you got to resell at a depreciated price, or if you paid in cash, even worse, if you want to get a new car in 3 years, significant depreciation the first 2 years, and then you have to get a new car. But if you like to have a different car, a new car, every few years, then leasing is definitely the way to go. You can afford more car at a lower price, but there are terms that you have to abide by. So there are mileage limits that you have to deal with. You have to keep it in very good condition because you'll pay if there's dings to it when you go to turn it in. You have to, again, be conscious of the mileage because you'll pay if you go over the mileage agreement. You cannot customize the car like you can if you finance or buy it outright, right? It's not yours. You can't make these changes. You can't add little stickers and decals and whatever fancy things you want to do to the car to make it personal. You can't do that when you lease the vehicle, but you can do that if you buy it. Sometimes an advantage is regular scheduled maintenance and like oil changes and things like that are included in your lease. If you buy it, that's yours. 2 to 3 years, most repairs are under warranty. So you'll probably never have to pay a major repair for a lease car, where you might have to do that with your purchase car, especially, after a couple of years when the warranty runs out and it's yours, because the car is going to be yours for a long period of time. A disadvantage, you never own the car if that's important to you, and you never stop making monthly payments, because if you're leasing and you turn it in and get another one, so in the long run, it's still cheaper to buy whether you purchase with cash or financed it, because at a point your payments will stop and you'll own the car for a period of time. And when you lease it, you never own it, so you're always paying. Once you turn it in, you're getting another one. You're always paying monthly payments forever, for as long as you have a car. Also, if you don't like the vehicle and you lease it, to turn it in, it's going to cost you. So they usually charge you fees for turning it in and getting another one, to be on the hook for a lot of money. As opposed to if you purchase the car and you don't like it, you sell it, right? Of course, you're going to lose money there too because of the depreciation, but you can just sell it and it's not a big deal, right? So you trade it in, sell it, get another car. So I don't know which one is smarter. Again, it depends on what you're trying to accomplish, but each one has its advantages and each one has disadvantages. And depending on what you're trying to accomplish, you got to look and see which one makes the most sense for you. If you like variety, if you like the lower payments, and you don't care about owning it because it's a depreciating asset. If you are someone who doesn't drive a lot of miles, if you're somebody who's careful and doesn't put a lot of wear and tear in the vehicle, then leasing is a good way to go. If owning the vehicles is important to you, customizing the vehicle is important to you, putting a lot of miles on that car is important to you, then buying it is the way to go. And if you want to get the cheapest deal, then paying cash is the way to go. If you want to own it, but you want to get a more expensive car that you stretch the payments out, then financing it is the way to go. But I don't know if there's a smarter way. So again, depends on what you're trying to accomplish. Hopefully that was helpful. I'd like to hear your thoughts and ideas. Have you ever leased? Have you ever bought? And how do you compare the two? But please like, share, subscribe. Keep the questions coming, and I'll see you next Tuesday.